What's up, you guys? Today we are going to be talking about phantom income. What is it? Casey, smile, smile. By the end of this video, we are going to know what phantom income is and how it can benefit us in investing in real estate. So, very first thing, why are we talking about this today? Well, this all came about first of all, it's because we're talking about the BRRRR method, and this is something that applies directly to the BRRRR method. Now, the reason why I've approached this topic is because one day I was researching personal finance, adding a little bit to my financial education, and I came across, while listening to the audiobook Why the Rich Are Getting Richer by Robert Kiyosaki, a section where he talked about phantom income. And I got excited because phantom income is the idea of taking value from a property through the source of leveraging or taking on a debt and gaining cash out of it and not paying a tax, which was shocking a little bit, because if you sell a property, you pay capital gains. If you take cash out, apparently you don't. Now, so phantom income, it was a hot topic in my mind at that moment. And the very first thing I did, I decided to go off to the computer and start typing phantom income on the computer. And what did I find?
Thought I'd just show you. Here I jump on Google and I'm going to just type phantom income. You can see lots of options here. It's been searched in different ways. Hit enter, boom.
Can you see the red flag? Let's look again. Remember, phantom income is non-taxable.
I'll give you a few seconds to look. 1, 2, 3. You give up? No. Let me highlight it for you. Taxable. So that was like, what? So phantom income is money that is never received by a partnership or individual but is still taxable. Also referred to as phantom revenue. Overall, phantom income is not terribly common, but does complicate the tax planning of participants in limited partnerships. Okay, this comes from Investopedia. And if I scroll down, I mean, we can learn about it more.
After my panic subsided, I decided to check back in the book and to see if I read it right or heard it right from Robert Kiyosaki himself. And I did discover that it was true. He said it's a non-taxable income. And so now I have to understand why. Now, some months have passed since then. And in that period, it's become more apparent that Robert Kiyosaki's definition and this definition I found are not the same thing. Now, I don't know if they're interconnected because I'm not a tax accountant, and don't take this as complete tax advice. It's just informational. Make sure you talk to your accountant about it, but phantom income can hurt you or help you depending on which phantom income you're talking about. And so let's talk about why the discrepancy, okay? First part, the first thing I can think of is that it's an English word, phantom income, okay? And two different parties have chosen to use the same word for different things, and even if they are contradicting things. Now, I don't know why he chose to call it phantom income. It does kind of make sense that it came out of nowhere. Let's talk about why this word has stuck, right? So a word can be chosen by any pop culture. A word can be created out of nowhere. If you're famous enough and you say something that someone likes, it becomes a thing. If you say it enough times, it gets added to the dictionary. And so here we are with two definitions for the same thing. I don't know which one's in the dictionary. Maybe we should go check it out. Let's give it a gander.
Using the online dictionary powered by Oxford, I threw in a quick research for phantom income, and this is what came out. No exact matches found for phantom income. I could look up any of those things separately, but it's just not there. Doing another search on Merriam-Webster.com, and phantom income has the same result, not showing up as a multiple word definition. But I'm going to check one more source. Let's head over to something unconventional. Just as I thought, UrbanDictionary.com resulted having a definition, and look, it's actually the definition we were looking for. We were fortunate to find that it is a decent a decent definition that I can share with the crowd and with your children. But income, you have to claim on your tax return, which is taxable, but you actually never received cash for. Okay. So it gives an example, and if I highlight over some of these words, you get some bad examples, some not safe for work answers. But I guess there we have it. We have a definition.
The second thing I wonder is who thought of it first? Who thought about using the words phantom income as this definition before the other, okay? And not that they have to choose sides, but I was curious to see who started using it first.
All right. To discover my answer, I started looking on Google again. I went through what I could read here on that first page to really understand what kind of law this really was, or what kind of taxable situation was occurring, and basically depending on how you've set up your corporations, pass-through entities, there are different ways that they report income that could hit you before, in a sense where the money was actually used to fix something, or there was an expense made where you didn't actually receive this money that it claims you have received. And so there's that definition explained slightly. Now, I'm more interested in the other definition, so I'm going to focus on that. So I started looking around, well, who was first? And what I would do is I would search with these, I would use the tools here and open up the custom range, and I would go back 1 year at a time to see who was winning, see who did it first, and I'd add Kiyosaki there at the end and find some articles like this one, Smart Money Guide, where at some point it talks about, this is Kiyosaki's article, he refers to depreciation as phantom income. So we're going to have to look at what phantom income is in the mind of Robert Kiyosaki at some point, but we still need to figure out who did it first. Now, I did find at a certain point an article talking about U.S. tax reform, but this article is from 2018. It's a report done, but it did reference this post-1986 situation. So there was a tax code in 1986 that changed or affected the way that phantom income was taxed. And so from what I can tell, 1986 was the moment in which it arrived, and I could be wrong. You can fix what I'm saying in the comments. I need to do more research, but I wanted to share at least what it seems to be at this point. I'm still more interested in the Kiyosaki side, and I'm just a little curious about who did it first. So I'm going to look at the timeline of Robert Kiyosaki and see what he was doing in 1986. In 1985, he co-founded the Accelerated Learning Institute, and then he did that for a while and ended up selling it. He wrote a book in 1992. He started getting closer to his rich dad business. And so, by this point, he was 38 years old. I think, 47, 80. Yeah, he was 38 years old approximately. And there's a chance that he had enough influence, but I don't know. We'll see. Let's just leave it like that. For right now, it just kind of doesn't look like it was his idea first. He's just using a similar term due to its similarity to a phantom. Okay. So let's find out more about, I'm going to open up this one right here. Okay. So this is actually a LinkedIn article. It was interesting. It's actually his book that I just read, and I was happy to find this because I didn't want to go back and listen to the Audible again and try to find that chapter. But it actually is excerpts of the book, and this is phantom cash flow. Okay. Phantom cash flow is real income of the rich. So phantom income is the income the poor middle class cannot see. Phantom cash flow is not ordinary portfolio. Okay, so debt is tax-free money. This is intriguing, right? We often don't see debt used for the purpose that most people see debt as like consumer debt. I use my credit card. I pay tax. I pay interest, right? Well, at a certain point, we talk about appreciation as phantom income, amortization is phantom income, depreciation is phantom income, and read the book because he explains why pretty well. I'm not going to spend a lot of time, but those three things are phantom income. leveraging your money and creating value is phantom income. Leveraging your money and making value from real estate is phantom income, apparently.
All right, so one is clearly defining a taxable scenario, while the other is clearly defining a non-taxable scenario, though they are different, one regarding appreciation, depreciation, and amortization, and the other regarding the money that you didn't actually receive being taxable because they had to use it for making expenses. But the way it's reported, it still looks as if you've received it. It seems pretty clear to me that the first group to use it was the IRS. Because I don't think that Robert Kiyosaki had that much affluence in 1986, having just started his academy in 1985. I could be wrong. He might have been using that term all the way from his youth. But the point is that the IRS established it in their tax code in 1986, and from that point on, any accountant that's known anything has known about this. And so it's been a part of our culture for almost as old as myself. It could be considered a millennial. Looking at this clip of Robert Kiyosaki and Tom Wheelwright, well, listen to him explain it.
Kind of the cliche term is between Tom and I is, I want more phantom income. Phantom income means money that stays in my pocket or doesn't go out of my pocket. It's the same money.
If it was to happen to me, I prefer to be on Robert's side of the definition. Now, because there is this other definition, I think from now on, I'm going to consider it Kiyosaki income since he's the only one who's defined it this way. Now, there are probably other terms that I'm just unfamiliar with, but at least it's going to be clear to me. And to you, if you want to start calling it Kiyosaki income, you have my full support. Going through this, how can I be sure that what Robert said is correct? For example, he said that if you take money out of a property, like extract the value or equity from a property, that is non-taxable through debt funding. And so I got curious and I did a little bit more research.
I decided to go back to this LinkedIn reference. Thank you to the author for providing this. It's a really helpful reference. And right here in number 37, appreciation is phantom income. Appreciation occurs when the price of a property goes up. A $100,000 property increases in value to $150,000. The $50,000 is a phantom income known as appreciation. It's talking about triggering a taxable event if you sell the property, but homeowners do this all the time. Okay, not selling it, but taking out a home equity loan. That is the same thing as I don't know why I knew about this and I just didn't connect the dots until I read this. It was finally a nice flashback. I decided to go, is money received through a home equity taxable? And so I found an article, and this was what the result was. Here we have an article that basically just says, first, the funds you receive through a home equity loan or home equity line of credit are not taxable as income. Okay, so we're getting it from multiple sources, and I trusted him. I just wanted to get more information. But it is good to know and connect the dots that a home equity line of credit is the same idea as refinancing. Okay, sometimes, this was one of those I'm an idiot moments, but you got to share it with me. So, yep, it's a non-taxable event when you take money out of a property using equity, such as a home equity line or refinancing of any sort.
All right, you guys, well, there's obviously a clear difference between these two definitions, and you can call them whatever you want. It's best to follow the actual terminologies just so there's no confusion online. Who knows if Kiyosaki income is going to become a popular phrase, but who knows, maybe I'll become famous someday and people will start imitating me. Anyway, it's been fun. Thanks for checking out this video. Like it if it's something you enjoyed. Share it if it's something you really enjoyed, or just share it anyway. I'd appreciate it. But definitely subscribe and hit the notification bell so that the next time we talk about the BRRRR method, you'll be in the know. All right? Thanks. We'll see you next time.